Good afternoon, and welcome to the end of week market review for August 9th, 2013. You're going to see that we've got a few things we're covering today. First off, we're going to be looking at the market news. Here, we just want to get an idea of what's been going on a global scale and how it's been affecting the U.S. markets. We're then going to go ahead and take a look at some economic reports. While we're looking at these, we're going to get an idea of what's been going on, what type of financial reports have been posted that will influence the markets. One of the most common things that we'll look for is the jobless claims. Definitely one of the most significant contributors throughout the week. Once we've done that, we're going to go ahead and take a look at both the S&P 500 and the Toronto Stock Exchange. We're going to be looking at these charts both on the daily time frame and the weekly time frame. While we're looking at the weekly chart, we are going to be looking short term and long term. Finally, we'll be looking at the volatility indicator and then obviously some of our ITL picks. So we can see that the markets definitely did end the week down. We have the Dow Jones down 1.49% from last week and the S&P down 1.07%. This was the first time after a significant winning streak that we had throughout the year. Actually, we haven't had such a large loss in quite some time. When you actually get a chance to really look at things, though, you're going to see that although the losses were significant, they don't compare nearly as much to the overall gains that we've had. So it's still very possible that we'll continue to see rising markets. We can see, though, while looking at some of our commodities, that oil is down 2.24%. This now puts it to $104.49 per barrel. We're then going to look at silver, which is currently up 3.27% from last week. This puts it to $20.51 per ounce. We've got gold down 2.20%. This puts it to $1,285.10 per ounce. And then finally, we have our US Canadian pair. It's down about 0.93%. This puts it to 1.0293 pips. So looking at the economic reports, you're going to see that we ended up with 333,000 claims. This was in contrast to the expected 345. So we can see that that was actually a little bit of a good positive boost as we had fewer jobless reports than expected. While looking at the S&P 500 on the daily chart, you're going to see that it's looking for some support now around the 22 EMA. You're also going to see that that happens to coincide with the rising bottom Bollinger Band. Whether or not we find support there is obviously going to depend on the overall market conditions, but we are in a declining bullish sentiment with the black line down below the blue line. So we are definitely starting to see our weakness in the markets. If we go ahead and take a look, though, at the S&P 500 on a weekly chart here, you're going to see that we've had some very significant gains. Obviously, though, there is going to be that pullback that needs to happen, and that pullback could work itself down even just above 1600. Looking at this red line here, which is the 26 EMA, you're going to see that it's consistently gone back and found support at this line throughout the chart time frame. So definitely a very real possibility. And although it would look like the markets are in a turmoil or going through a significant decline, it really isn't enough to make us believe that the markets are turning around significantly, because as you can see, we've had these dips before. Going back even further, now we've gone back to about 2004, you're going to see that these gains have been significant. We actually have nothing to reference to going back to 2004 that we can actually use as profit targets. So obviously with the markets as high as they are, it only makes sense that we're going to have a little bit of a slowdown period, a little bit of a chance for the markets to pull back and regain themselves. The Toronto Stock Exchange, on the other hand, isn't quite looking as good. If you take a look at it on the daily chart, definitely things are starting to look a little bit better at short term, but you're going to see that we've actually had ourselves down into a declining bearish state. Obviously, it's only been down there for about a day, and we're going to hope that that was all of it. There does seem to be some signs that we will continue our rise now. It looks like it came down, tested some support at the 200 EMA, and now is on its way back up again. Going into the weekly charts though, you can see that we've definitely continued our declines. Our cycle lows are lower and our cycle highs are lower. So the TSX really isn't doing very good for keeping strong stability. When you go back right to 2004, you're going to see that we've got quite a few hurdles that we need to break through before we could be in the all-time highs. Certainly though, we're nowhere near our all-time lows, but all in all, things are definitely starting to look like they're weak right now. So with that said, if you have any further questions, make sure that you either send us an email or call us toll free. Both our email address and phone number are listed on the screen. This has been the end of week market review for August 9th, 2013. Ciao for now.